Hello everyone, welcome to day 13 of Batman strategy adjustments. In this video, we are going to see what happened to our positions today. And the market has been in a constant ascent. There has been no break. It's in complete steroid mode, uh, taking newer high every single time possible. So let's look at what has happened to our current positions right now. So here we are in Upstra. This is the base strategy. Base strategy is entered into a loss of about 945 rupees, and weekly edges strategy is at a loss of 3700 rupees. So a significant directional move has happened on the upside, and market has been everybody is expecting some sort of corrections, but then it is on an ascent continuously. So let's look at what the payoff graph looks like in the base strategy. You see, from in the Batman, it has skewed almost to the right extreme possible, and another 700 points, we will get into serious losses, right? So we have to make certain plans right now, just in case if the market moves beyond 24k. Yes, we know that there will be a lot of profit booking, but in case there is enormous amount of rally happening, probably it is inching towards 25k, then we should be equipped, right? So our adjustment will be to deal with that. At the same time, can we optimize, let's say that the market is coming down, still we will be in good profits if the market comes down, but then can we improve the profitability in this range is the real question. So those are the two aspects that we are going to cover in this video right now. And as you see, we are in a loss of about 945 rupees. Yesterday, we have done an adjustment by writing this 23,000 put options at 120 rupees. Now it is currently at 91 rupees. So this is the update. Now, what I wanted to ideally do is, tomorrow is Nifty expiry. Of course, all these legs that we have taken in the weekly edges will be expired, and we have to take a fresh position, right? And first thing I wanted to ensure is, if you look at it, the break even is exactly 24,498. This is where the break even is, and which means 24,500. I don't want to lose money if the market goes beyond this. So what I'm going to do is make the first adjustments for the day. Let's go to the weekly edges. What is that I wanted to do? I wanted to make sure that I am making some good money in case if the market goes up. And how do I do that? Let's bring in 4th of July, because tomorrow I don't want to buy edges of 24,500 call options for tomorrow because it's going to expire worthless anyway. I wanted for 4th of July. So whatever be the premium, I don't care. I wanted to first ensure that my upside is protected. It's not about 8 rupees now, it's about break even. I don't want to lose money if the market goes beyond 24,500. For that reasons, I am going to add July contract, get option chain 24,500. Let's see where it is trading. It's trading at 16 rupees. This one, what I'm going to do is, I'm going to go little aggressive by buying 4 lots of this. Okay, buying 4 lots exclusively for any sort of upside move. All right, so this is what one thing I would like to add here. Now, the payoff, you see, it is actually ascending. The reason is that we had added 4 lots of call option additionally without any writings. So this is the reason why it is going on the upside. Although the payoff graph may not be very relevant because we have multiple calendars spread over, but this is literally true because we will be making money if market goes up, obviously. So that is one thing. Now my upside is protected. But if I have taken 4 lots of this, says 16.2 into 4 is about 64-65 rupees lost now, right? I don't want to lose this money. So what I'm going to do here is I'm going to make some additional adjustments. How I am going to do that? Here two options are there. One, I'm going to 25th of July. Um, first, let's save this position. First of all, this position to be saved. Okay, done. Now let's go to this portfolio and see the base strategy. What are the strikes that we have written as the first base strategy? 23,300, 23,300 call and put we have written, and 850 CE and 650 PE we have written. So let's go and check what happened to the 650 PE value. Basically, I don't want, if you're really someone with good capital, I don't want you to do this, but then some options I am showing you. So 23,650 of July. 22,650, I'm sorry. It's trading around 56 rupees. So we have written this somewhere around 229 or something like that. Currently it is at 56 rupees. What you can do is, probably you feel that I have limited capital, I cannot do multiple writings just like that. Then buy this, close this position, and then write something below 23,300, right? Below this you write something, probably 23,000 itself, you can write two more lots. That is one option. But that is a risk, because if there is any sort of crash, then you are going to make bigger losses. Not loss, probably it will affect your profitability to a great extent. You will not be in loss, but your profits will come down drastically because you are moving the options closer. But additionally, what you can do is, I don't prefer closing of that leg and then writing a fresh leg. Instead, I wanted to add a little bit more solidity to my trades. What I wanted to do, I am going to use tomorrow's expiry as a advantage, because the option premium on the put side will be absolutely like throwaway price. So what I wanted to do is I am going to take, see, 23,200, not 23,300. 23,300 is our original Batman. So I am going to 23,200, which is trading at 120 rupees. This one I am going to write two lots. It sounds super crazy. Why I need to do this? Because this is only a temporary position. Let me explain that. Because tomorrow is expiry, the put side premiums are at a dirt cheap price in tomorrow's expiry. Let's go to tomorrow's expiry and see where they are trading at. For example, 23,350 and 600 is trading around 10 rupees, correct? Now, this one I will buy two lots, okay? Now, what happens? In case if there is any sort of black swan event, this 10 rupees will first jump super fast. This 10 rupee will probably there is a 500 points crash or something like that. This will become like, say, 150 rupees or something like that, minimum 150 rupees or something like that. And probably that one which I have written at 120 rupees would have become, say, 300 rupees. Not 300, probably, yeah, probably 300 also. Maybe I'm losing about 10 rupees there. Still, I will be more than happy to make further more adjustments. I will be booking this intraday profit first with the call options, with the put options that has been purchased for 10 rupees. I will ride that. I will take that profits and then deal with that loss from the put options much later, because it won't be technically at loss, because when the market is going down 500 points, look at the call premiums. Call premiums are exorbitantly high. So I will be first making more money than what I am losing. So that is the kind of position that I wanted to create, and how it looks like. So, have we added? So two lots of this, two lots of this, and call side I am not adding over here because this is the base strategy. I don't want any sort of edges to be reflecting on this. So let me delete it from here so that it doesn't mess up with the payoff. This is how it looks like, and the base strategy, we got protection from 22,680 levels to 24,558 levels. So that's a good range we have got. Call side ranges are shrinking because we are aggressively writing on the calls. Put side. Put side ranges are reducing because of the aggressive writing from the put options. So if I wanted to summarize what I have done, this is the base strategy. So I am not touching it. This is the base strategy. So I'm not touching it with the legs. Only main writing that I have added here is two lots of July month end contract at 120 rupees, 23,200 put I am writing. So this one I wanted to save. This is the basically this is the only leg that will go into the base strategy because rest are all edges. You need to understand that. Now this is saved, and I am going to get over here. If you look at this one with edges, 16 rupees we have purchased for getting us protection beyond 24,500 levels. Super good profits we will be in if the market goes higher. On top of that, what I am also going to do is to ride on the advantage of puts getting butchered so fast. So I am going to add the same strikes over here as well. Going to 25th of July, get option chain. 23,200 is trading around 120 rupees. This one I will add two lots. Added. Now this is only for tomorrow. All right, I am not going to carry this for very long time. This is only optimization I am showing you. So for selling this additional two lots, I need some protection. So I am going to 27th June, get option chain, and let's go to this 23,600, buying this two lots. Okay. If you want to be ultra safe, you can also go ahead and then buy 3 lots or 4 lots. It's up to you. 2 lots is good enough to release the margin. That much you should know. Now I am adding this position. Now if you look at it, the entire capital needed for this is 1,81,000. And we have protected the upside. In fact, we will be making super good money if the market goes up because we have written 2 additional lots of put at 120 rupees. So definitely that is going to be super profitable. If the market goes down, still it will be profitable because the call options are almost 2 times that of put options. So you will be making much higher money than losing on the put side. So this is the game plan, and I will decide towards the end of the day whether to retain this strike or not. The 120 rupee strike that we have added, whether to retain that or not, we will decide basis how the market is responding tomorrow. Right, that's the update for today. So thanks a lot everyone, and hope you are enjoying this series. If you have any questions, any comments, please feel free to post it in the comment section. If you are new, please do go back to Batman strategy. There is a playlist created. Watch all the videos one by one so that you know how these many legs are created. It might look so confusing and scary. Don't be worried. If you go from the start, it is super easy to understand. So that's the update. See you all tomorrow.